I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Kevin McNew. Today is the 12th, it's a Thursday, and we had export sales released out this morning. But before we get into those, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 2 3/4 cents, soybeans trading up 5 1/2, and wheat in Chicago trading down 5 1/4 cents. Kevin, let's talk about export sales here. What do we see?
Yeah, exactly, Cody. I think the big numbers that were positive were corn and beans, and especially beans, where we saw 745,000 metric tons. Keep in mind we are expecting, or the market's expecting, to see a taper off in export sales, so coming well above trade expectations at the high end of 450. Corn, again, another really strong week, coming in at 1 million metric tons. Wheat, again, a little bit disappointing. We're within that range, 350 to 550, coming in at 409. Just nothing to write home about in wheat, which is keeping the wheat market on the defensive right now.
Absolutely. And when you look at that, the wheat export sales, you can see there's nothing outstanding about them. We're not ahead of pace. But when you look at soybeans, this is what's very interesting. We are very well ahead of pace. We have 46.2 million metric tons that has been booked at this point throughout the year. This is well ahead of the expected pace, the seasonally adjusted pace that we would need, which is about 40.7. So we're about 6 million bushels, or 6 million metric tons ahead of pace. And corn is very similar situation here. You have corn 4 million metric tons ahead of pace to meet USDA expectations. You can see the red lines represent weekly sales, actual cumulative sales, and the green line there is what we would expect to see based on the USDA's projection updated in February, and you can see we're well ahead of pace right now.
Yeah, exactly, Cody. And I think one of the interesting things about that corn data is the outstanding sales numbers. What do you say?
Yeah, I agree. I mean, what's very interesting about the outstanding sales here is that right now, at this time in the marketing year, we have 17.6 million metric tons that has not been shipped out of the country. These are outstanding sales that still need to be moved. Now, when you look at the history here, we have in the 10-year moving average, we have 11.5 million metric tons, which is that's kind of the standard. That's kind of what we would typically see. On the high side, the maximum that we've seen in those 10 years is about 19.6 million metric tons that needed to be shipped out. So we are well on the high side of what we typically see.
So what that tells me, Cody, is that there's a lot of grain in corn that needs to be moved down the river and moved for export. And what we're starting to see is a pickup in basis, and especially in the carry along those river terminal markets. And so if we look at let's take a look at this first slide, which basically shows spot basis since the 1st of December for 2 different market segments, one in blue, which is the river terminals, and one in red, which is the ethanol markets. And what we've been talking about over the last few months is how the ethanol markets may come under pressure, or the ethanol buyers may come under pressure as ethanol prices come down. And so what we're seeing is their ethanol basis, or I'm sorry, their corn basis has been going up, but not as fast as the river terminal. In comparison, you'll see in dashed lines here the 2013 basis levels. So the basis levels are lower than what they were last year, but you can see the river terminals are definitely picking up speed here as we get further in the marketing year. Now, as we look ahead for the forward curve, in essence, what are they paying for corn delivered either to March, April, May, or June? What you can see is a noticeable difference between those ethanol buyers and those river buyers. Those river buyers are really paying premiums for bringing it, a couple months out. From spot to March is about 10 cents. That's pretty. I'm sorry, March to April is about 10 cents, and in comparison, the ethanol buyers are just not very eager in comparison to the river guys. So again, I think your story holds true here that these outstanding sales are going to keep basis levels firm at the river terminals, and at the same time, ethanol buyers may take a back seat as they face competitive pressures from falling ethanol prices.
Absolutely. A lot of grain still yet to move down the river. Guys, if you have any questions about what we talked about today, give us a call. The number is 877-472 4607. We'll be back here Friday for the weekly wrap-up. We'll talk a little bit more about the basis changes, what we saw over the last week here. If you haven't done so already, go ahead and take a demo of our trading platform. You can do so at grainhedge.com and actually click on the top right-hand corner where it says 14-day free trial. Nice thing about this, you get live quotes. You also have the ability to download a smartphone app that allows you to view the live quotes and trade on the go. Thanks a lot for tuning in. We'll see you here on Friday.